Okay, so today is Tuesday. We're coming off a really big drop from yesterday. Overnight, Asia and London dropped about 1,000 points. Let's see, is it 1,000 points? Maybe we dropped pretty heavily. Yeah. Yep, just about 1,000 points. So let's see if we can get some kind of continuation move, or if we're going to pop back up. We'll see if we get back above this previous week low level. Right, so opening move, pushing lower. Let's see. All right, coming down to this New York low level here. Where is that? That is all the way here to the left, because we have nothing to the left here. So it's all the way down here to this level, 640. This level here is going to be the draw today. That's the most obvious level. So right around 550, 500-ish, 520. Okay, and we've got the drop into the New York low with momentum. All right, welcome guys, welcome YouTubers, Relative Index, Decoding My Life. Good to see you guys. All right, so getting a little spike here. Good morning, Anna. Good morning, Webster. Kyle. Good to see you guys as well. So let's see if we can kind of roll into a good setup today off of yesterday's. Really wish we would have held yesterday's, but I mean, there's a million reasons why. You know, I closed early and I did what I did, mainly because all of our directions were all still bullish. You know, we're still pointing upwards here. So I really was thinking that we were going to get another big retracement. So, but price just kept falling. Hey Eve, how you doing? Good to see you. All right, so nice rejection off of the New York low, right? Pre-market low. Trading above here will give us a change of character. As you can see, indicators flip-flopping because we need a closure above. So far, that is a sweep, not a change of character. And still don't really have much to go on yet. But we do have this nice massive engulfing candle after we took out this low. So if we do get a closure above here, that will be a change of character. And then we'll see if we can get some kind of move back up to our points of interest here. So what do we want price to do? If we want price to go lower, I would like to see price tap into at least a 15-minute point of interest, right? Well, first step in the checklist is what? Higher time frame point of interest. So we need something on the higher time frame. In this case, the 15-minute, like this imbalance, an order block, or even taking out a high. But since we have divergence here at this high, and this would technically be like a retest of previous week low if this was higher, I don't really want to see price get back above previous week low if we're going to continue lower. I want price to just kind of do something here and just continue falling. So if we get back above previous week low, then I'm going to probably look for a price to retrace a little bit higher up into the range, meaning it'll come back up, you know, to maybe this mitigation or even this one, right? If it does get a really strong push back up. Because right here, the mitigation here overlaps with this nice imbalance here that's going to be created at 10 o'clock, so long as we don't come back up and close it in the next 25 minutes. Right, so we've got a low here overlapping with an imbalance, 4-hour imbalance here. So what would be really great is if we can come back into this right here, tap it, and then come down like that, right? But that would also mean that price comes back above, where are we? Previous week low, which is right here. So it's the cutoff point, right? That start of the imbalance is where the previous week low is, or the, yeah, right at the top of that high there. So it's an interesting level. It's also right under the 30K level. So I would think that if price wants to continue lower, we'd stay under this. The argument for price to come higher is going to be, look at all this liquidity that we are basically engineering for price to come back for. All of these highs that have not been taken, look at these green lines, right? So it gives a nice cascading lower low, lower high structure all the way down here, which eventually will get run through. Each one is going to get run through when we come back up. Also, let's take a look at the daily structure real quick, okay? Because we did respect that previous week high yesterday, right? We came really close to it, and then we dropped away from it, right? And this is the resulting drop. So you can see we have the bullish candles here being traded through. That's pretty significant, right? 1,000-point drop, trading through the gap here, right, that we rejected from, and now trading back into this big order block here, which price pushed higher from. However, the order block did not take out structure, right? We didn't break structure with this OB, so it's not technically a very strong OB. I think we will get a reaction. So we'll probably get some sort of reaction. We'll get some range formed, and then we'll sweep out that range, and then we'll come down. Something like that. That's what I would like to see. Hey Zane, good to see you, buddy. All right, so, and the reason why I say this is because we did this before over here, right? We can't see it now because of the contracts are spotty, but this was the all-time high from before, right? And we came down, and then we came back up, right? Just like we're doing here. It's like almost the same exact thing that we're seeing here. See this like a small structure over here, right? That we took out to create the all-time high up here. Did that over here. Then we went down, massive, right? We had a huge move down. Same thing here, right? Broke structure. Then we came back up, took out some sort of internal swing over here, took out an internal swing over here, and now we're probably going to consolidate right here, right? So we consolidate, and then it'll create a range. It created a range. We took out that range. We respected the high here. So, you know, this, it might come back for this and still respect this. I don't know. I'm just guessing. But it's, you know, patterns and charts tend to repeat themselves sometimes. So we'll see if this kind of stays in this range. I don't really expect this to come down to take out this low just yet, but maybe it will. So yeah, we'll do run below here first. Session gonna be so choppy. The overnight rise was crazy. Yeah, I mean, we dropped 1,000 points. Let me just reiterate that again, right? We dropped 1,000 points, you know, between Asia and London. So, I mean, we're pretty extended to the downside. I feel like we're gonna get a pop back up, right? And so if we do, then we'll probably get above previous week low. If we get above previous week low, then we'll probably see price chop back into the range here. But this level here, I think, because we're so close, we can take that before going up. But we'll see. We don't have any red news this week except for Thursday. Yeah, Thursday, and that's just like a regular, red folder. Core PC price index, final GDP, right? Nothing too crazy. And then next week we have the holiday weekend, July 4th. So I feel like the next couple days are going to be pretty up and down, let's just say. Because when we get a big move like this, usually we come back and we can chop around, we consolidate, and we do some all, weird stuff. So but yeah, if we're going to get a continuation down, we would want to see price come back for any of these highs. I would rather it come back for this, to be honest. But all of these are kind of candidates. This one right here still would be inside of that 4-hour imbalance, as you can see, right? So even if we took that and traded back into it, we still can respect that imbalance and come down. But yeah, let's see what this does here on the next 15-minute candle. If we close back inside, then we might leave this here. Closing underneath, or closing above here, this low. And that'll give us a bullish bias on the 15. And we'll also close above the previous candle as well. So that would kind of solidify that as the 15-minute swing low. We did sweep that New York pre-market low right here. Over here. And if we go back and look at this structure, take a look at this, okay? We have the low that was taken right here. New York took this London low. All right, so remember back to Saturday's lesson about liquidity, right? And this being thin liquidity down here because we've already taken the lows here. But then when we take this, we break structure, right? And then as we're doing that, we're also creating higher lows as we go up, right? So all of this here is engineered liquidity for price to continue up from. This right here, I would expect to hold. So I don't necessarily need to see price come down here unless we're really, done with this area up here. We're going to continue down. I think that we'll, this move right now that's showing us that price is holding higher will continue higher, and especially if we get the change of character and, like I said, the close back above previous week low. So now that we have this sweep here, right, we have the opposing New York high level here, we have the previous week low level here, right, and then we also have this swing high above that if we get above that, but the imbalance, right? So basically trading back into that imbalance is what we want anyways if price wants to continue lower. So with this 15-minute bullish candle that's about to paint, the 4-hour, let me see, 4 hours going to also potentially be bullish, right? If we close above, like I said, above this. So then we'll have two time frames in alignment for a retracement back up into this imbalance. And I think that will be the play that we have in front of us at 10 o'clock. Do I still trade the M's and W's like Steve? No, I don't. I don't really look at M's and W's as patterns because they're everywhere. mean, there's a W here. But if you turn it around, there's also an M right here, right? No, I'm just messing with it. I mean, those are it's subjective, right? M's and W's. You know, what you want to look at are, you know, liquidity, structure, that kind of stuff. And M makes sense when there are confluences that confirm the M's, and same thing with W's, right? But if you take every M's and W on the chart, then most likely you're just gonna end up killing the account. Yep, you know, if you combine it with other things, right? M's and W's, it's just like any other thing that you use, right? Any other strategy, any other indicator, any other confluence that you use, you pair it with other things that give it extra confluence, then, you know, you have a thesis and then you have an idea. I just don't happen to use the M's and W's anymore. But right, exactly. Yeah, sometimes, you know, especially with the BTMM M's and W's, the confirmations, you need the EMAs first of all, which are also lagging. You need the second leg to form, and then you need it to cross after the 13F5 cross, which by that time the move is probably already done for the most part. If you got that far, the move is pretty much played out. I guess it also depends on the time frame as well. Checklist, yes, definitely use the checklist. If you guys don't have the checklist, it's in the description. Download it, follow along, so you know what we're looking for. All right, nice little sweep of that level there. That was the level that we wanted to stay above or below. So the 15-minute candle has closed below it after rejecting it. Now we'll watch for this candle. So this candle right here is pretty much everything, right? In terms of our bias. If we get this to close below and under here, the 4-hour will be bearish. The 15-minute will also be bearish. And then we'll be continuing down. If we close back above, then we have a confirmation, a bullish confirmation with a second candle confirmation. And the 4-hour will also be bullish, having swept this low and close back inside. And then from there, we can just look for this to hold and trade back up to, so for instance, closing above here, right? Then coming back and then doing something like this, back into this 4-hour imbalance. I think that'll be the most logical setup that we have going into 10 o'clock. And then from there, if we get a reaction out of this imbalance, then we can look to take the shorts again. That's the problem I usually have. Especially with choppy markets, I've had perfect entries at all the confluences that have gone nowhere. Yeah, I mean, do you trade futures? Do you trade Forex? Are you trading like NASDAQ like us, or are you trading some other asset? Because if you wait for M's and W patterns on NASDAQ, or anything fast, like, you know, like gold, or, you know, something that moves a lot of times if you wait for those confirmations, it's going to be like the move is going to be done. So it'll work a lot better with things that are more stable moving, right? So like, you know, EU, GU, that type of stuff in Forex. And for futures, you know, like ES, maybe the Dow. All right, nice move up here. 15 minutes is going to close bullish if we stay like this. Started out with Forex pairings, but now trying to get into futures and currency futures. Okay, yeah. Steve doesn't trade M's or W's because he does futures too. I'm sure he trades his own stuff, but yeah, he does trade futures. And he traded futures like, you know, way before. So yeah, there's just so many more benefits to trading futures than there is forex. I mean, there's still people that do really well with forex, and there's still, you know, people that are making some pretty good payouts with forex funds. So it's not something that, you know, that's like impossible to do. But you have a lot more advantages with futures than you do with forex. And that's why we made the switch 2 years ago. Yeah, if you want to call it ICT or smart money or whatever, you know, that's like all over YouTube right now. I started that trading that back in 2019 when it was less prevalent, when there was less videos on it, but now there's videos on it all over the place. So you have no shortage of, you know, places to go, resources to learn it, and the thing that happens with a lot of people is they try to learn all of it, right, as much as they can, because there's just so much information out there. But really what you got to do is just kind of pick, you know, one or two concepts or you know, some things that really stand out to you that you can understand, that you can implement on your chart, and then just roll with that, you know, for a good while. You want some good statistics, right? You want to take, you know, maybe a few months trading a strategy before you switch, because that's another thing is some people switch strategies way too often, right? A week, 2 weeks of trading something that doesn't work, and then they go on to another strategy, and then the wheel spins again, right? The cycle starts all over again. You're never going to get consistency that way because you just don't have enough data to tell you whether the strategy works or not. So a few losses, sure, every strategy is going to have losses, right? But over time, you know, those losses will eventually turn into wins if the strategy works and you have an edge. It should, you know, give you a net positive expectancy, but that takes time to figure out, right? And that's the thing that most people don't give enough of. Do you not like ICT? I mean, listen, the whatever, like his strategy, like his concepts they're not new either, right? His stuff that he teaches is pretty much the same stuff that's been around forever. He just slaps a new label on it, slaps a new, you know, moniker on it. But you know, the stuff that he teaches has been around for a while, you know, regardless of what he says. He's the one that definitely brought it mainstream, right? He's the one that brought it to, you know, that how prevalent it is now is because of him. That's for sure. And BTMM, you know, is a derivative of, you know, smart money. It's you know, it's all the same stuff, right? Steve got it from ICT. Steve got his stuff from ICT. But he just rebranded his stuff and took the stuff that he liked from it and built his own, you know, strategy from it. And really that's what you got to do as a trader, right? You got to take stuff that you learn, like your trading style is going to be different than anyone else's. It's your trading style, right? And your style isn't necessarily going to work the same way as somebody else's. So if you learn something and I learn something, we're going to trade it differently, right? We'll interpret the concepts differently. We're going to implement it differently. So, you know, it's one thing to copy someone, but like you really can't copy them to the T, right? Because you're not going to have the same, you know, reactions, emotions, and things like that when you're live trading. So you got to take the things that you learn from other traders, other resources, and other things that you learn out there, and then you kind of mold it into your own style, right? Take what works and then figure out what works for you, and then kind of build that into your own strategy. And obviously you can model the things that you see, right? So that it you know, So that's like similar, right? But it's not going to be 100% the same. It's never going to be that way. You have to find your own path at some point. According to you, were you profitable trading BTMM? I was profitable trading BTMM, but when I found smart money concepts, it filled the gaps for the BTMM stuff that I just that was always lacking. Like BTMM is great in theory, like 3 levels up, 3 levels down, M's and W's, right? But like there's lots of subjectivity, lots of discretion, with BTMM that doesn't get explained until you really understand what price is doing, right? And what the big players are doing in the market. So you learn about market makers and institutions and stuff like that from BTMM, but you don't really know the workings behind it until you dig deeper. Like levels is great, but how often do you see price go up 3 times and then come down 3 times, and then it's never like that, right? So what happens when there's a 4th level or a 5th level, or what happens when it what happens when it only reverses 1 level and then it goes back up, right? Yeah. To say that you could just kind of slap that onto a time frame and have it work, it's it'll work specific times that you can cherry pick out of a session. Sure, it'll work a few times. Identify peak formation, trade with the bias until another peak. Yeah. It really depends also like on the style of trading. I'm more intraday, and I would say more so like it's more towards scalping than it is holding for trades for longer. I don't really have the patience to hold trades for days, let alone a session. So I can't do swing trading really. So I'd like to just be in and out, be done with my day, and then come back the next day. So to each their own. And like I said, that's just that's part of the trading personality that you have to figure out. If it's a swing trader profile that you're more conducive to, or if it's a scalping style that you're more conducive to. That's all the path of discovery that you guys got to do on your own. Figure out what works the best. All right, look at this candle. This looks great. So 2 minutes, we've got a closure. 10 o'clock is going to start the next 4-hour candle and the next 15-minute candle. We're going to get bullish, and then we're going to look for, most likely going to be looking for a run back up to this imbalance, even though we've already pretty much come back up to it. Yeah, you could argue that every strat has a bunch of discretion in it. There's really, it's difficult to find something that is just purely, not discretion based, because every situation is going to require some kind of discretion from you. So, and that's the gray area. That's the stuff that you can't teach. That's the stuff that isn't, inherently, just teachable, right? That's stuff that you have to kind of figure out on your own. It's intuition. It's stuff that you've seen over and over again that will happen or will not happen, right? It's like a gut feeling. So if we run back down to that imbalance, there could be a long position. Yeah. So basically, what we want to see happen here is we want to see this candle close. If we close back above New York high here and above this change of character, then it's going to be bullish for sure, right? 4 hours going to close bullish, as you can see over here. All right, and then we want to see price. Then there's going to be a big imbalance, a 4 hour imbalance down here that we trade back into. That possibly could be the catalyst for price to move down. There's a swing right here. That's where I wanted to see price reject from. You can see we've already kind of tapped into it here. So 30K is the midpoint of this imbalance. Funny how that works. Oh, it's going to be if it closes like this, right? So 15 seconds, let's see what it does. But midpoint of that imbalance there, 30K. I think that's, and it's also where the gap was as well, right? So it's interesting that this level should show some sensitivity, and then we should see price roll down from there if it does a good reaction. So there's the close. Okay, there's our imbalance. All right, and now let's see what price does. So now we're bullish, you can see here. And we now would look for price to come back to that 15-minute change of character level here. So where is that? That's going to be 29, it's like 880. This is where we broke the structure, so we could also get a tap here, but this whole big thing here, this level here, could be an imbalance as well. Let's see. Can you say someone trading purely BTM on a stable pair can be profitable long term? Yeah, I've seen people do it, so I know for a fact that that's true. You could do it. It's just got to be, you know, just be consistent with it, stay with it long enough to understand where your edge is, right? And pick, you know, a pattern or a strategy that you know, that's going to give you consistent results. But you know, it's just you taking the time to do that is the hard part, because most people don't take the time to do it. After a few losses, people get discouraged, right? And they feel like the strategy isn't working. They're going to go on to something else because they take a few losses. But the losses are part of it, right? A lot of people don't want to accept the losses that come with trading, and it feels, obviously it doesn't feel good, right? So they try to look for something that's going to give them a higher win rate. But the more you do that, the more the cycle repeats itself, right? Because you're never going to get that, you know, all-encompassing, all-powerful, holy grail strategy. That's never going to give you losses. So you got to learn to take the good with the bad, and you gotta stick with something long enough to see that it's actually working or not working. Right, and therein lies the double-edged sword, because the longer you trade something, maybe like, you know, you trade something for a long time and you're like, oh man, this actually isn't working. Now you wasted all this time on a strategy that isn't working, right? That's, you might look at it that way, but that's part of learning, right? That's the experience that you're gonna get. Like, believe me, the experience that you get from trading that strategy, that quote-unquote non-working strategy, is going to help you in your next strategy to shorten that learning curve the next time around, because you're going to know what to look for, right? And you're also going to know a lot quicker if something isn't working, just because of the amount of time, you know, you spent on it. But, you know, trading in general is an ongoing learning process. It never stops learning, ever. There's always something you can learn, and there's always something you can improve on. So, you know, the more you trade it, the better you get. It's hard to do something for, you know, years and years and years and be bad at it, right? Hopefully you guys agree with that. But, you know, some people can improve quicker than others merely because of, you know, they're more efficient in what they're doing, right? So that's, you know, that's something that you got to work with. But the main thing is that you stay with something long enough to know whether or not it works, and then also giving it enough time to, you know, really show you the results, rather than just kind of going 1 or 2 weeks at a time, 1 month or 2 months at a time, and then switching every time it doesn't, you know, doesn't show you good results. Tobias, how are you, sir? Been trading with BTMM, but like you said, there are some stuff that doesn't show through. Though I'm now learning footprints, delta, VWAP imbalance to better see what's really happening. Yeah, so This is something that's in forex you didn't really need in forex, like volume, right? In futures, volume matters a lot more. So it's definitely good to incorporate things like volume, if you're trading futures. But for forex, like there's no way to tell, if that volume is actually doing anything, right? Because it's not real data. But here on the future side, for sure, volume is, it's at least it shows you something, right? It gives you some data. So now you probably see a lot of people doing things with volume, like volume profile and VWAP and, that kind of stuff. So there's some merit to that in futures. But if you're trading Forex, I would say the less you have on your chart, the better. Don't add all this stuff onto your chart to make things more complicated, to make it look more advanced, when all it really is going to do is just going to complicate your strategy a lot more. Less is more. Quality over quantity, all that stuff, right? All of that's true. Even strategies that have fewer steps and fewer things to look for are better than if you just keep adding more confluences, because it at some point it waters it down. It has like a negative effect on it, right? It starts to make things less efficient. Okay, futures good. Yeah, if you're trading futures, then yeah, for sure, all that stuff is good. Footprints, volume delta. That'll be helpful. Here, let's just for fun, let's put a volume profile on the chart and see what it looks like. So we've got a lot of consolidation here, right? Lots of volume here. So you'll see that there's lots of orders being transacted here. I believe this is point of control. Let me put on the... Let's make this a different color. Right, I feel like this is this can be helpful in terms of like another confirmation, but really, like, how many confirmations do you need on a chart, right? Like if we have all these things confirming, like at some point it just gets to be too much. So I try to keep things a little bit as simple as I can. I mean, I've already got a bunch of indicators on my chart now, so and most of the indicators I have are things that are like constants, right? So like things where it's there's order blocks on the chart, there's session highs, swing highs, swing lows, key levels. There's nothing lagging, right? I don't have EMAs on my chart. I don't have RSI. I don't have MACD. I don't have anything that can change with price, right? Whatever's there, it's static and it's on the chart. So like I know that those are levels that cannot be like messed with over time. So, but with volume, it's different. Like volume is actually showing you orders that are transacting in real time, right? So it's a little bit different. So over like this price point here, you can see lots of volume transacted here, right, in this area, and that's why we have a lot of consolidation. Areas where there's like very low volume, you can see that like we just went straight down here and there's imbalances, so there's very low volume here. Right, so like how much that really helps you in terms of your analysis and things like that. It could help you if you know that there's a lot of orders back here, there's a lot of high volume back here, and price moves away from it. If it starts to retrace and come back to it, this could be an area that you can target, right, for like take profit. Like if you think that price is going to come back to the consolidation, back to where there was a lot of volume, because that's a strategy, right? That's like a mean reversion strategy. When price moves away from a certain area, it'll come back to that area of high volume or fair price or whatever, right? Lots of different ways to kind of spin it. But it gets to be a point where there's like, there's just a lot of stuff on your chart, and then, you don't really know what you're looking at some point, right? When you just put too much stuff on there. So try to keep it as simple as possible. Try to keep it, to where you have, I would say at least 3, confirmations, right? 3 to 5, I'd say is a good sweet spot. But any more than that, I feel like is just going to be too much noise. All right, so now we have what we wanted. We have the break above. We have price trading into the 4-hour imbalance. We have price trading to 30K, right? And now we just want to see if we can get a closure back inside. Here will give us a short bias. Staying above here will give us the long bias that we want to continue higher. All right. If we close above here, I want it to be a smallish candle, right? Like a really small candle, and then leaves us imbalance open so that we dip into the imbalance and then we can pop up from this. All right, 15-minute imbalance is here underneath this low, or this low right here. So this cluster right here would be the 15-minute imbalance. This low right here would be the internal sweep that we want. But unfortunately right now we're already in the imbalance, so we kind of have to wait for price to either confirm or deny this level here. Originally what we wanted for this bias, right? So you can see when we closed here, we were already pretty much at the imbalance. What we wanted was for price to close back up here at 10 o'clock, right here where this was, okay, and then give us this move up to this imbalance here. But you can see that between 9:50 and 10 o'clock we pretty much covered that ground. This move right here was, oops, what am I doing? This move right here was about 120 points, right? So we would have looked to capture about 70-80% of that on the move up into the imbalance. But since we've already moved into the imbalance, we've already hit our point of interest up there. And if we get a reaction from here, taking a long here isn't that wise, because number one, we're already at the top of the range for this, right? And so taking a long in the premium is not always a good idea. Sometimes it works, okay, if there's a lot of momentum and price just it's going, then yeah. But you can see we're consolidating. We're not doing too much here. It's looking like we might get a retracement. So taking a long here isn't probably going to be safe, especially the risk reward now is gone because our take profit, or our profit our point of interest is already hit. So how do I confirm the next setup is if I go back to the 15, right? We need to see a closure of this level, okay, of this break, because now I need to see price, confirm the sweep or the run, right? And so a sweep would be if we close back below this high, trading into this imbalance, that would be bearish. If we're bullish, we're going to close inside of the imbalance and above this high, right? That confirms that we're still bullish. So once this candle closes in 15 seconds, right, we're going to have a bullish candle close above this high and inside the imbalance. Okay, and then what I'll look for is I'll look for price to come back to, retest the high that we broke. All right, now that that's closed bullish, we have the 15-minute imbalance is now solidified here. This is now an imbalance, and we got another one that's forming here potentially. Okay, but now we're at 30K. Midpoint of the imbalance, the 4-hour imbalance, we have a sweep here that's happening. So I don't want to long here until we come back down and take out some internal liquidity. So this would be candidate number 1. This would be candidate number 2. This one would be much better, obviously. It's much lower in the range. And this is also that 15-minute imbalance as well. This is where you gotta stay patient. Kind of what sucks to sit here and just wait as price kind of like does all this stuff without you, but if you can't sit on your hands at these types of areas, this is where you're gonna blow up a lot of your accounts, because you'll just get chopped up in the ranges here. One-hour imbalance right here, overlapping with this 4-hour one. All right, slow consolidation. So this low here, if we could take that out and get a reaction, could be a trade. And this low here, so we gotta wait for one of those two sweeps. Hopefully it does it in the next 20-25 minutes. If not, we'll have to settle for a no trade day today. you can see we are already trading above this little reaction that we got. So there's another break of structure there. And this is definitely not looking short at all. So we're definitely looking for price to go longer. This high right here is going to be the next obvious draw, right? We're already through this midpoint here. And if we get a closure through, that's even more apparent. So next candle is going to be 10:30 on the 15-minute. Let's see if we can get up to this high here. Now this area is initially where I said I wanted to see the internal sweep, right? If we take that high, we get the internal sweep. We have a 15-minute bounce right here. And then if we see a very strong rejection level from there, you know, that would be good for a short. But if I take a look at this whole structure from top to bottom where we dropped yesterday to the low where we just turned around here, right? You notice that we're still in the bottom half, okay, of the discount, which is where we want to be. If price wants to continue lower, I do want it to see it like stay in the bottom half, right? I don't want it to go above up here, even though technically like we're looking for a short. We want price to come back into a premium and then come down. But a move like this, obviously if this retraces all the way back up like 800, 900 points, then that's not going to be bearish, obviously, right? So we do want to see price stay in the bottom half here. This sweep, okay, confirming this sweep here would be step one of seeing it come down, but that doesn't mean necessarily that I'm just going to short it there after it takes it, right? What would be another confirmation for me to see price go lower? Well, if we create, like you can see, we're creating an imbalance here, right? And we also created another imbalance here. We can trade through those and also close underneath previous week low. Okay, that's like three things. Okay, so we have number one, let's say we come up, we sweep the high, this internal high right here. Okay, and then we close back below, right? That would be a confirmed sweep. Now to confirm this even further, right? And then we want this to continue to show us that it wants to go lower. So we'll create like a lower high here, and then we'll come down, and then we'll invert this imbalance. And then we'll close under previous week low. Okay, and that's further evidence showing me that price wants to continue lower, right? Acceptance below a previous week low, key level, inversion of an imbalance that's bullish, right? Also a sweep of a high. Okay, and then from there, then you want to see like an internal sweep and then a continuation down like this, right? So this is probably going to take some time to develop into a short. If it's going to develop into a short, that's what it would look like, or that's what I would look like, or what I would look for. Well, SpaceX is all the way back down to the opening price. It peaked at 225. Ooh, came really close to that high there. Let's see where we are. Like 1 point away. looks like 55 is that high. Right, 4 more minutes until this next 15-minute close. See if we close bearish back inside the range. Did come very, very close to that high and stop. $30K, big figure. We are getting a reaction there as expected. That's a good little reaction from that OB there. So we've got a 1-minute OB off of this change of character, and price just barely took out this high here, right, and came down. So reacting to the OB, coming down here and closing through here, I think we'll get a nice 15-minute bearish candle closure. And then we can look for a retracement back into this range here. Four-hour point of interest. Closing outside of it, closing back under previous week low, right? That's what I said. So if we close under, so we get a sweep. We didn't really get a sweep, right? So that's not really a sweep. But we did get higher time frame point of interest into an order block or imbalance. Okay, 15-minute order block, 4-hour imbalance. We swept the internal high up here, right? We didn't sweep this high, which is unfortunate. But I don't feel like this is going to be a buy back up here if we close back underneath this previous week low. And we've closed this imbalance in, well, we didn't really make one yet because obviously the candle hasn't closed. But let's see, did we? Yeah, technically there's still a very, very small imbalance right here, right? So if we close like this and then we trade through it, then and close underneath, and then that could be a reversal back down. But I think we need to wait for one more candle, which would put us into 1045, and then see if we come down for this. All right, 4 seconds. Okay, 15 is going to change to bullish, or sorry, bearish. All right, so we have a 15-minute candle that has traded into this order block, right? We've got a bearish reaction, okay? To confirm, we need to see the imbalance here inverted and previous week low traded below, okay? So right now we only have one candle confirming the bearish bias. We want the second candle to confirm by closing underneath here. Even underneath this New York high would be good too, because then we'd trade further into this imbalance. And then that would give us, you know, something like this, where we come back and then we look for an internal high here to sweep for the move down. Okay, or maybe not even this far down. Maybe it just comes down to like this level here. If we can capture even a small move like this, right, with a short setup, 30, 40, 50 points, that would be absolutely fine. Unfortunately, I don't think it's going to happen this session, but 15 minutes is a long time for stuff to happen. This is a pretty big stop from that change of character. And this is the low that we want to see it sweep if we can get down to it. That would be about a 1-to-1. Okay, so if we can get a internal sweep in here to retest this change of character as such, right? This is the short that we will look for. I want to see it close underneath the previous week low on the next candle. 15-minute candle closure underneath here, right? And then we'll look for this retracement back to this level. That will be the short setup if it happens. This would also be in the premium of the range, right? That would be fantastic. Okay, once we get below here, then this is no longer entry territory. And then we'll be looking for buys back up. Okay, there was a closure underneath here, but that's 1 minute. It's not what I was looking for. Okay, there's the retest of the change of character. $50 level. Okay, we've got a bullish divergence now. And I'm still waiting on 15 minutes. So 15 minute has traded into the imbalance, right? And we're getting a bullish reaction from it. And we're still hovering on this previous week low. No, that was a joke. He was just being sarcastic because I get asked like 10 times every time we're on stream. Someone always asks, despite how many times I answer the question. We're not in this, no, not yet. It's very tempting to be in this, but I'm gonna wait just a little bit longer for this confirmation here, just so that we can get a closure underneath and into this imbalance, because this imbalance could still send price upward. And even if we do, you know, trade lower and we miss this entry, you know, the target is going to be down like here, 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 right? We still got plenty of room on this down move for this after this confirmation. So if we don't have 15-minute confirmation, I don't really want to trade with it, even though we do have, like, technically we do. We've got a daily and we've got a 15-minute bearish, right? But this right here still hasn't really confirmed for me. Number one, we didn't sweep this, right? Number two, we haven't closed below here, and number three, we're trading into this bullish POI right now that's still rejecting. So I don't quite trust this short just yet. And there we go. Let's pump it back up. Okay, so we watch this very carefully. This high right now that's getting traded into is our internal high, right? If this is in fact the high that's going to get swept and stay as the high, you can see that we are sweeping this right now here. So let's move this over here. Okay, now if we get this sweep, okay, and we close back underneath previous week high into this structure here, or previous week low, I'm sorry, that'll be confirmation for a short, but not until we do that. So I've got pretty much everything I wanted to see, right? We traded into a higher time frame point of interest. We had a sweep, although it wasn't a sweep of this high, although to the left we did sweep internal structure. We have a displacement with a change of character, right? And now we have our internal high sweep here. Okay, if this is in fact this sweep, then what will happen is we'll confirm by trading below previous week low. So this right here, we'll trade up, sweep it, and then we'll get a closure underneath here, and then we can take this short. Okay, just want to confirm all of those things before I jump into this, because otherwise this right now is a 15-minute imbalance push to the upside. And a retest of previous week low. Okay, good movement. We got divergence as well, so that's good. That's all 5 steps then if we get it. Okay, we've got an imbalance here that's currently being inverted. Also very good. And all we need is just a closure below previous week low. Right, and then we can take the retest of this 50 level if it comes back. All right, the closure below previous week low is on a 15-minute level, so another 6 minutes to close below that. All right, we can wait a little bit longer here. See if it happens. We got the inversion. We got the closure of this right here, but not the previous week low just yet. It's right on the borderline here. And we've also got 5 minutes to go on the next 15-minute candle, so I just need to see that confirmation. All right. And yeah, then we'll get this nice little evening star pattern. Shooting star on the 4-hour. So what we're looking for is we're looking for this 4-hour expansion down, right, to the next low. or right here. This one, this one, this one. Okay, there's the closure below, that's good. And here's the imbalance that we inverted. Here's the 50 inside the imbalance. Let's see if we can get back up to that. If not, we get a retest of this change of character line right here. 930, 920 is a little imbalance right there. Okay, but still 4 minutes to go on this candle. Just need to see that 15-minute candle close underneath here and not pop all the way back up on the candle close. Even better if we close underneath this New York high as well. But we close under this and close under this, that's pretty good. Three minutes to go. Oh man, look at that push back up. Ugh. Okay, 2 minutes to go. Well, it was looking good. All right, there we go. Come on, 1 minute left. A lot can change in a minute. Okay, looks like we might get it. It did touch the imbalance, right? Just barely, look at that. Okay, so in 20 seconds, if we get this closure, we can take it. Your broker touched it. All right, take the closure right here. Stop is a little bit big. This is going to be big because I want it to be above this this level right here. We can adjust it later. I'm going to enter right now 880 is the level I got in. 120 is my stop. So it's a big stop loss if we can get to 1-to-1 here, 120. All right, let's see if we can get it. Yeah, if it does take out the high, that's fine, because I got my stop above this high in case it does. So it's covered. And that's why it has to be a little bit bigger. But yeah, let's see what it does here. Amika's in. Let's do it. Take profit Tuesday. All right. Dangerous point once we get below here, because it certainly could pop up. But if we get a clean close underneath that level, it will be very good. Nice, good close. Let's watch it continue down maybe. We made some imbalance as well, which is good. TP under this low right here. That's smart. I think we'll probably get a bounce here because that's the level that we traded above. So that will probably be a smart place to either take profit or put to break even. Let's see what this does here. This was always going to be a level of anxiety. Let's take out a low and see if we come back up. I mean, we come back up and retest the low or the imbalance or the order block is all, you know, valid. So would love to see this come down and close underneath that blue candle and then below that low again, further solidify that. Do I think it'll go lower than RTP? Yes. If it stays underneath this level, then yes, I do. You could keep the, the stop where it is if you're not bothered, leaving it to go for that low. It's just that at this point here, we've already dropped this much, so leaving it to keep going is, a bit of a risk in my opinion. But let's see, this is coming back up. I don't like the way this looks. Taking that low. All right, watch it as if it comes back above previous week low. That's not what we want. So it retested it. It's an order block here. If it does come back for this high, like I said, and then come back down, that would be good, but it doesn't need to do that. Good reaction here if we can close underneath and back through this imbalance. Good close. Let's go. Okay, close back under this low here. On the next candle, that looks like some nice momentum. Got divergence as well. Okay, looking very good. Good close, good close. All right, it's right on the line, but I like that close. We did invert this imbalance, and we're creating our own imbalance in the process. So I like this move. Okay, it's coming back up a little bit, but that's all right. Come on now. There we go. Nice little pump down. Okay, and we're almost at this next low here. All right. Let's see. This is going to be about 80 points to this low here. Did get the closure underneath. I think I'm going to set my stop to this high. And we'll see if we can get this low here. Okay, we already got a reaction here once before. If we close back above, I don't know if I like it, to be honest. But we'll keep it here. As long as they stay under previous week low, like I said, then I think that price is going to want to keep going down. It's already 11. So I might just exit while taking this out because we're already up 50 points. And yeah, there we go. Come on down. Come on down, get it. Come on, you got it. Come on. Yeah, that's what always happens, isn't it? All right, so when you hit this low, I'm going to get out of this at 80 points, okay? You could set it to break even and keep riding it. You know, it's up to you guys. But if we hit this level, I'm going to be out. It's already 11. I feel like something else might happen after 11. But I'm happy with 80 points. That is more than I need. Okay. 1 minute to go. Oh, actually, no, sorry. 15 seconds to go, actually. Yeah, I don't like this consolidation at all. No. All right, there's the 15-minute candle. It is bearish. So everything is still good to go as long as we stay under previous week low and this high. Man. You guys know if I get out of this trade, you guys will just, it'll fly down once I get out. Ah, I don't like the way this looks. Come on. All right, my stop is at break even. It's at 880. If it stops me out here, no. All right, I got stopped out. Okay. Not too great. We had about 60, 70 points almost down here. It's okay. It's a good setup either way. I'll watch it come. Watch it roll down now. Oh shit, it'll roll down right now. Okay, you guys, I mean, it's up to you guys. If you want to stay in with the stop there, you may still could roll down. Set and forget. Yeah, I'm out of the trade. I just don't like the way it's kind of coming back on me like this. If there's another entry, I'll take it once we clear like this, because once we clear this level and we go lower, if there's like another re-entry and we're going to go for this low, it'll present itself. But if not, then, you know, we'll just come back tomorrow. I'm expecting days like this all week, right? This kind of like choppy-ish kind of back and forth stuff. So I might, you know, tighten up my TPs. Maybe, you know, after we take out a level like this, we should have probably gotten out after taking out this level here. But it could still keep going, you know. All right, good stuff. We'll come back and do it again tomorrow. Look at this. Look at this. It's gonna keep dropping now. Every time I get out. Okay, guys. Any questions before we call it? A little bit longer session today. We stayed to 11. There it goes. Oh no. No questions. Okay. All right, guys. Appreciate it. We'll see you guys tomorrow. Thanks for all those that participated on YouTube today. See you guys tomorrow as well. That's it for me. Good luck with the trades, guys. Take care. Thank you.